We all know who Bill Gates claims to be, but most of us don't actually have the nicest idea of the man behind those glasses. He was a ruthless businessman and very controversial back in his day. He, of course, founded Microsoft and built it up into one of the most valuable and dominant companies in the world. The chances are that you use some of his software every single day of your life, and you'll probably continue to use it up until the day you die as well. With that kind of success, of course, comes unimaginable wealth, and Bill Gates is no stranger to that. He was the world's richest man for 15 years in a row and has only recently lost that title over the last few years as other tech company founders like Jeff Bezos and Elon Musk have jostled around with that crown. What most people probably don't realize though is that he actually divested away from Microsoft many years ago, and while he still owns about 1% of the company, he doesn't even scratch the top 10 shareholders list. Instead, he invests through the Bill and Melinda Gates Foundation, which of course he fronts as purely philanthropic. It's run by the Chief Investment Officer Michael Larson, and he's been in place for years now as well. Over the last year though, something strange has started to happen to that portfolio. He started to sell his positions, and these weren't small positions by any stretch of the imagination. He's been dumping his shares, taking his money out of the market, and he's been doing it like a madman. Today, we're going to look exactly at what has happened in his portfolio and why Gates has decided to go down this route, and the real reasons will shock you to your core.
So since we last talked, small thing has happened. Russia has invaded Ukraine, and it feels like we're in a new world. We are going to be seeing higher energy prices, higher food prices for years to come. It seems difficult to see how this resolves itself very quickly. What does that say to you about the economic outlook for the next few years?
Well, it comes on top of the pandemic where government debt levels were already very, very high, and there were already some supply chain problems. And so it's, likely to accelerate the inflationary problems that rich world economies have and, force an increase in interest rates that eventually will result in an economic slowdown. So I'm afraid the bears on this one have a pretty strong argument that concerns me a lot, particularly because the poor countries, whenever the rich countries have these big budget problems, the health needs of places like Africa get deprioritized.
So Bill Gates' thoughts there are really quite clear. There are enough problems facing the world economy right now, and they are mounting, and there's no way out. You've no doubt heard this all before, so I'll spare you some tiresome details, but in short, the pandemic led to a zombie economy propped up by free money and irresponsible governments. This false economy then evolved into one spiraling out of control with inflation soaring, not just in the US either, but across the entire world as demand was stimulated to the extreme. CPI data started to rise and panic started to set in as it became abundantly clear that everything that happened over 2020 and 2021 was a grave mistake. But then came the war in Ukraine, and overnight the problems got so much worse. Commodity prices exploded as their supply was instantly constrained, not only from the war itself, from the physical violence and the limits that put on things like grain exports from the region, but also from governments and their political posturing. Suddenly, it was unacceptable to get certain commodities from certain states, and supply chains found themselves more complicated than ever before. At the exact same time, the world was already struggling with a supply-side crisis that was nigh on 18 months old and whose problems stemmed from the COVID lockdowns. Factories had been shut down in expectation of a worldwide collapse in demand, but that collapse simply never came, and instead, every product in the world was in short supply, and so prices rose even more through upwards pressure. All of this meant one thing to Bill Gates, that interest rates would go up, that quantitative easing would be replaced with quantitative tightening, and everything would change in the markets. Of course, we already know this today. We've seen these forces start to take hold. We've seen markets drop 4, 5, or even 6% in a single day, simply because Jerome Powell came out with a few hawkish words during a speech. Gates knows that the only way to fight inflation with all these problems causing it is to crash the economy, and he knows that is going to happen next. There is just no way around it. To stop prices from rising, you have to either increase supply or decrease demand. Our governments cannot increase supply, but they can decrease demand, so they must. They need to take money out of our pockets, they need to take equity out of our homes and take zeros off of our investment portfolios. For as long as these numbers keep going up, we will keep spending. Now, if you've been paying attention to the markets, you've been seeing how badly stocks are performing this year, and you're thinking about diversifying your portfolio, or maybe you just want to hedge against the ridiculous levels of inflation that we've seen over the entirety of the last year, then you need to hear about this video sponsor, Vaulted. Vaulted is the best way for an individual or even institutional investors to acquire physical gold with a great website and mobile app that makes it easier than it's ever been. They store and insure their gold in the Royal Canadian Mint. It's all real one-to-one allocated gold manufactured by the Royal Canadian Mint and certified conflict-free, meaning you can rest easy in the knowledge that you can request instant and physical delivery of your gold holdings wherever or whenever you desire. Their prices are the best in the market because they store all of their gold at the manufacturer and they cut out all unnecessary middlemen. They don't charge any premium or spread when buying or selling you gold, and they are as transparent as possible, meaning there are absolutely no hidden fees. On top of all that, they even managed to put out a load of really interesting content to keep you updated on the world of gold. Now, if that sounds interesting to you, then I highly suggest you check Vaulted out. There's a link down below for you all in the description and the comment section. Again, that's Vaulted with a link down below in the comment section and description. What is Gates, his portfolio, and his manager, Michael Larson, actually doing about this though? Well, thankfully, when you have as much wealth as Bill Gates, you have teams upon teams of people managing that money for you, and you have to make regulatory filings every quarter so the world can really see what's going on behind the scenes. These are called 13F filings, and they give us an eagle eye into what Bill Gates is actually doing at any one point. Now, the first thing to note about what he's been doing is the stock that most people would imagine would hold a very large place in his portfolio, Microsoft, is not the favorite that you might expect. Gates has been steadily thinning down his position in Microsoft since he retired from the company years ago, but over the last year, he started dumping his shares far quicker than he used to, and he now only holds about $250 million worth. His biggest holding, on the other hand, and the only company that he's actively buying more of, is Berkshire Hathaway, the fund run by Warren Buffett and famed for its ability to outperform the markets, especially when growth is slow or stagnant in the rest of the world. Gates currently owns about $10 billion worth of Berkshire Hathaway, and that number just keeps on growing every quarter. Now, this alone should be very telling, as Gates is a man who made his money in the polar opposite way to Warren Buffett, yet even he can recognize that times have changed, and now is the time for smart investments in solid companies that can turn a profit in a tough economic environment. Across the rest of the board, though, Gates simply isn't buying. In fact, he's selling. He's selling his positions in consumer defensives companies like Walmart, which historically have performed very well during recessions. He's selling his multi-billion-dollar position in Waste Management, Caterpillar Inc., and Canadian National Railways, showing that he's really not too confident about the state of industrials when it comes to the economy either. He's winding down his positions in materials, in information technology, in utilities, in telecoms, and in transports. Across the board, actually, everywhere you look, Bill Gates is selling all of his stock as he is adamant that a coming recession is going to tank asset prices, and high inflation will make it incredibly hard for traditionally strong companies like Walmart, to benefit from a recession. We need to remember that Bill Gates is a man who perfectly understands capital markets in regards to growing a business. He founded and built Microsoft for decades. He went through bull markets and bear markets alike. He raised capital, released bonds, sold shares, and knows what an interest rate means for the environment. He knows how devastating these hikes can be for businesses and growing businesses especially, and Silicon Valley is the best simple example of this. That region, that industry has benefited from loose capital for over a decade, mostly thrown at useless businesses that will never actually be profitable. The founder of WeWork, Adam Neumann, who is practically a known fraudster at this time and basically stole billions from his company, started a second company and raised $350 million with no problem at all. The worst thing about it, it's basically the same company all over again. He's running the same exact scam again, and investors are so desperate to invest in something or anything that they threw $350 million at him for no good reason. Tech companies in the US are used to having far too much money and loads of leeway with rich customers. This interest rate environment changing ends all of that. These people have never built businesses without 0% interest loans, and they can't do it without that. This is going to be the reckoning of Silicon Valley, but not just for tech firms. Every industry will be hurt by this changing environment, but yes, tech firms will be hit the hardest. Car dealerships will suffer, fast food restaurants will suffer, retail stores will suffer. This recession will hit every person and every business. Bill Gates knows all this though, and he's known it for months now, and he's been acting on it too. He's taken his money out from within the jaws of the lion and is investing instead in things that you can't make any more of. He's buying land, he's buying farms, he's investing his cash into things that will always be needed and will always be in limited supply. Now, frankly, I'm not suggesting that you go and do what he's currently doing, because obviously you and I can't go out and buy tens of thousands of acres of farmland and use our influence to get it all done, despite the government trying to stop us with all their might. We simply can't do that, but actually we don't need to. We just need to pay attention, to be sensible, to think about what's truly going on in the markets, to not bury our heads in the sand, and to open our eyes. We need to be responsible with what we have and not YOLO our life savings into Tesla options or dog-themed cryptocurrencies. And if we can do that, I'll wager that in the end, after this recession has been and gone, we'll all be just fine.